Hello and welcome to another episode of Business 24 here on iBrandTV Lagos. I am Michael Naz. Now, investing is a way of setting aside money while you are busy with life and have that money work for you so that you can fully reap the rewards of your labor in the future. On today's episode of the show, we'll take a look at stock market investing, what you should know, and how you can leverage on it. Now, we'll take a break. When we come back, we'll bring you more here on Business 24. Stay with us. It's Business 24 here on iBrandTV Lagos. Stock market investing happens where one can become part owner of a company by buying into units of the company as listed on the stock exchange. Today, we'll focus on the rudimentaries of investing in listed companies on the floor of the Nigeria Stock Exchange. Well, joining me now in the studio is Olayemi Akonde. Olayemi Akonde is a business and media strategist, a chartered accountant, chartered stockbroker, Google certified project manager, among others. Thank you very much, Olayemi, for joining us on the show.
Welcome. Thanks for having me on the show. The way you just recited, I'm like, oh, is that me?
I was so surprised I had stopped because I had wanted to go on and on. And now, please tell us, stock market or stock market investing is something everybody out there must have heard about, but know little or nothing about it. So can you tell us what stock market investing is all about as it pertains to the Nigerian market?
Thank you, Nath. Okay, so stock market is basically you putting your money into somebody else's business to become a part owner, basically. So there is a company A that is divided into several units, equal parts, and like, okay, Nat, can you take 2 units? Oh, Olayemi, can you take 3 units? Just like that, we buy the units up to make a whole company. So we become shareholders, we become owners of the business in relative to how many number of shares that we have in that company. And we expect the company to give us returns in form of dividend. It could be half yearly or at the end of the full year. So basically, is basically that's just a summary of the investment. I put money in a company, and they give me a return in terms of dividend.
The amount of money and an investor puts into the company, is it the same across the board?
No, it's not. It's not the same. Okay, so if a stock has, they call it outstanding shares. So if maybe I list you on the stock market, like a NAT stock.
Yeah.
That sounds nice, right?
That sounds good.
Like
and I feel great.
Yeah, fantastic. I like the name. So if, let's say 1 million units, 1, 2, 3, 4, 5, 6, 7, 1 million, and each of them sells for 5 naira. Now, the process of valuation, it's another topic entirely, but each of them 5 naira. So I call a Victor. A Victor takes up 10,000 units. Olayemi takes 20,000 units. It depends on what you have and what is available. You may have so much money, and the outstanding number of shares that you can buy is not available. There's nothing you can do about it. So the number of shares is limited based on if the stock is just coming newly to the market, the number of shares that they're introducing to the market, or if you want to buy already listed stock on the Nigerian Stock Exchange, it depends on how many units that's actually available to be sold on any particular day. So that's just a simplified explanation.
Now, stock market is thrown out there for any interested member of the public to be part of.
Yes.
What happens in a situation where an individual has the money to buy all the available units?
Okay. One, there are rules that states the proportion of shares that you can own.
Okay.
There are. Now, if
there are limitations.
Yeah, there are limitations.
Okay.
Of course, if only you has access to the shares, then it's no more a publicly traded stock. It's called public because many people actually own it. Do you understand?
Right.
It's not privately owned. It's not one-man business or family business. Everybody's open. So for you to be listed on the floor of the Nigerian Stock Exchange, there's a minimum percentage of the shares of your company that you have to bring on board for the public to actually partake from.
Okay.
So one person counts. If not, you're not a PLC. You're not a publicly listed company.
There is a maximum level.
There is a minimum that you can bring.
All right, beautiful.
Yeah, there's a minimum.
Now, tell us, what could make one want to invest in stock market investing?
Okay. Stock market, like any form of investment, is a kind of investment that you actually get gain from if you know what you're doing. That's the buyer's big one. It's not gambling like a lot of people feel like. I could just go there, close my eyes, and just like, okay, I'll pick a stock. No, it's not gambling. It's a lot of research actually going into it because there's so many companies listed on the Nigerian Stock Exchange with different characteristics in the market and off the market. When I mean off the markets, I mean the real companies themselves. If I pick a Nestle, for instance, Nestle is listed on the Nigerian Stock Exchange. Its characteristic of Nestle is trading 1,000 Naira plus. Nestle is a kind of stock that it doesn't go, if you look at the graph of Nestle price, it doesn't go wow, 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 because they call it defensive stock. It's relatively stable irrespective of what is going on in the economy. Now, if you look at Nestle company in PLC outside, now the Nestle company, you're looking at their brand and the fact that it's a premium brand in the market.
Okay.
People like their products, it's quality, they have good management. So now that's me defining, explaining what off the market is and on the Nigerian Stock Exchange.
Okay.
Yes.
Okay.
Okay. So why do you need to? Because one, you want to make profit. Simple. You want to make income. That's all. Because you can't put all your money in your savings account. One, to take maybe 3% or 2%. I can't remember how much it is. Not everybody can do fixed income. Not everybody can do Forex. So it's just another avenue for you to put in money and make money.
What qualifies a company to be part of the stock market investing?
To
be a member.
Listed.
Yes, to be listed. That's the word.
The Nigerian Stock Exchange,
yep.
Which is PLC now, and the Security and Exchange Commission, that's the SEC, they have guidelines for you to check if you're qualified or not. Of course, size matters.
Can we know some of these guidelines?
I don't know them often, really.
Okay.
But size matters, number of years of existence matters, and some other, of course, you must have financial, your financial records must be edited over a period of time. So there are things you have to follow before you can come on board to list. Now, there are some companies that are not big enough to be listed on the Nigerian Stock Exchange. We have secondary markets for Michael Nuts.
Oh, mine is secondary. Well, go ahead. We're going to get there someday.
Exactly. So those companies that are not ICAP, like you're not needing a lot. You don't want to raise a lot of money. Now, you need to also understand that companies just don't come to the exchange for the sake of coming to the exchange. Many of them actually come to the exchange to be listed because they need to raise money. So they could actually go to the bank and borrow, and they will keep on paying interest. But the banks don't own their business, meaning at the point when they finish making payments or paying off their loans, the rights of the company belongs to them. They are still the owner. We just borrow money from you, and once we pay back, that's all. Now, we don't want to borrow money for reasons best known to us. We can give out 41% of our stock in exchange for your money, for my money, for somebody else's money out there. So we come to the market, we sell this number of shares to raise this amount of money for expansion, of course, you're going to explain why, what you're going to use the money for.
Yes, honestly, I was going to ask you, what does a company benefit from enlisting in the stock?
Yeah, the company is getting, because the money raised, they're not paying interest on it.
Okay.
It's not a loan. They're not going to return it, right? They're expected to pay dividend to shareholders, but if they don't make profit, you can't hold them responsible for it.
Are you serious?
Yes, because you are the owner of a business. If you have a business and you don't make profit, a co-owner. So if we don't make money, well, we didn't make money this year. We will make money next year. But you can't come. The only way you can get your money back or get an out from the company is for you to sell your stock to another person that is interested in buying. You really can't go to the company and say, give me my money, and you can trade it with another stockbroker. I mean, another investor, and get your money and be out. So the money they get comes to them. They can use it for expansion. So whatever it is that they planned or written in their perspective that they want to use it for, they can use the money for it without being under pressure of paying interest. If it were a bank loan, then the money is not coming, is not going out. So it's actually beneficial for the company to raise, they call it cheap fund, right? Because it's they don't have to pay 20% or whatever interest if they are to borrow it, and they are not under pressure. Not like they are not responsible or they are not obligated to make profit, right? But they are not under, they don't have to have bad dreams if they are not paying interest. But if it is bank and they are not paying interest, they have collateral securities that banks can actually take over. But for an ordinary shareholder, really, there's nothing you can do to them because it's your company as much as it's theirs.
Now, when you say I'm a co-owner of a company, just because I bought some units of stock, don't I have a say? Even though I don't have any physical participation in the operations or activities, of the individual company in question, don't I have a say?
Oh,
like
you
suggestion,
do have a say.
Opinion?
You do have a say, but you have to, the official time you can really say what you have on your mind is when the company is doing annual general meeting. All companies, actually, they fix annual general meeting where shareholders can come, and say their mind, like you said. Now, if you have a specific percentage of stock shareholding, I think 4% or 5%, of course, the more units you have, the larger say, the larger.
Oh, really?
Yes. There's some there's some percentage of holdings that you have that you can actually appoint someone to represent you on the board of the company. Yes. Yeah, because it's your money that is talking, right? I mean, if I have 25% of the company, that's 1/4 of it. I should have somebody representing my interest on the board, right? So that's it. As compared to someone that has maybe just 5,000 units. I'm not saying it's not big enough. I'm just saying the more investment you invest in a company, the higher your level of control also in the company.
But whatever number of units you buy won't exceed that maximum amount of units or number of units an individual is supposed to buy?
Well, let me put it this way. The owners of the company, a lot of them always retain 51% because that's the majority shareholding. There's something called majority shareholding. So there's 51%, then there's the remaining 49%. 49 plus 51 is 100%. So I'm the owner of the company. I'm not going to leave my controlling right. They call it controlling right, 51%. So if they're saying the majority carries the vote, so you can say that 51% carries the vote. So, but when they come, some can list 20%, some can list 20%, and list another 29% to private investors. Then they will hold 51%. So as an individual, I don't see a situation where you are going to own the 100% of a stock that is not even your company, because the owner of the companies won't even allow you to do that, except if it is your company, or if for one reason or the other there is takeover, right? And you buy it up, then you delist it, you remove it from the stock market and pay off other shareholders, then it's 100% becomes.
Thank you very much. Thank you so much. We're not done yet. We're still on Business 24 here on iBrandTV. We're going to take a short break now. When we come back, we'll continue from where we stopped. Stay with us. You're welcome back to Watching Business 24 here on iBrandTV Lagos. And in this discussion, we are looking at stock market investing. I still have with me here, very much around, Olayemi, a business and media strategist. Back to you.
Thank you, Neil.
Yeah, we've been talking about the stock market. How would you relate the last thing you said, you know, about individuals that's owning the bigger portion of whatever, that's of 100% belonging to the company. How would you relate this to what happened between Elon Musk and Twitter? Okay,
based on my understanding, Elon Musk bought Twitter. Yeah, so 51%, 49%. He bought the whole company. What you can do if you have money.
Yes, because I was going to ask, but you said, you sounded like such a thing is not possible.
What I mean is, it's almost impossible for you to buy up the whole company from the floor of the market by just trading. I go to the market today, I just trade, I buy. No. If you want to buy it, you have a sit down with the owner of the company, right? It's not, it's a corporate finance kind of thing. I want to buy up your business. You're not buying it from their back, because you can't get everything to buy from their back, because it's not, sometimes it's not all the shares of the company that's even listed that is available to the public.
Okay.
So, and it's not all the shareholders that want to sell to you, even if you're buying from the market. But you can approach the company and offer them sweet deal. Like, okay, your stock is trading XYZ, 4 naira, 5 naira. I'm going to pay you 20% above what is currently trading if you sell to me. And whatever it is, other sweetener that you want to give to them. So you now own the company. That's what it is. So the company is no more on the floor of the exchange. It is now yours. You're buying up all the shares. You're mopping it up, everything. And the company is now yours.
In other words, what you're saying is that what happened between Elon Musk and Twitter can also be replicated in Nigeria.
Of course, it can. It's corporate finance. I like your company. I'm offering you something. I like your jacket. And I know that somebody owns the sleeves, another person owns the collar. But you know what? I want everything. I buy everything up, and I go away with the jacket.
Has anyone ever done it?
Yeah. Let's say, I know some companies that, for instance, we used to have 7-Up listed on the floor of the exchange. And it got to a point in time, the owners of the company that has the majority shareholding, they decide they don't want other shareholders anymore. And they pay them off. And now you can find 7-Up listed on the Nigerian Stock Exchange. You can't. But it actually happens when another company buys up another company. Sometimes it's hostile buying, sometimes it's willing buying. So those ones are technical. But it's possible for you to operate the management of the company and buy up the stock. But it's almost impossible for you to buy up 100% of the company by trading it on the floor of the exchange, because even the total amount being traded on the floor of the exchange is not the total part of the pie. It's like I have a big cake and I divide it into and this half, I shared it to everybody. I still have the other half with me.
To yourself.
So you can't get it, etc. I said, oh, okay, you want this? Okay, I'm selling it to you, the old cake. You understand now?
How would you relate this to what happened among the banks, the commercial banks, where that's two banks merge and all that? It is nothing. It doesn't have anything in common with what we're talking about right now.
Well, sometimes the regulatory body comes up with banks, they should increase their capital base, increase your capital base, increase your base. And I just feel like I may not be able to raise the money within the stipulated time.
Okay.
And there is another bank that can't meet up. So we come together and get married and become bigger. That's one. Then there's sometimes that a bank takes another bank over. So it's not marriage, it's takeover. It's not equal. Like when Access swallowed Intercontinental Bank.
Okay.
So you see, if you look at Access, there is nothing retained from the logo not retained, the name not retained. You might have even forgotten Intercontinental Bank because Access actually swallowed them up. And now, Standard Trust Bank and UBA came together. That's why when you see UBA logo, it's the old Standard Trust Bank's logo. But UBA is still the name.
Okay.
Do you understand?
Okay.
Now sometimes government established bodies like AMCON, right, to take over companies or banks that are in a very dire position and they need capital pumping. So it's the government that's, okay, so you're dying, I'll take you over, I'll pumping money into you. After a while, sell you off. The likes of Enterprise Bank.
Let's not deviate from what we've been talking about, Olayemi. Very briefly, when is the right time to buy on the floor of the stock market?
The
stock exchange,
the general principle is buy low, sell high.
What's that all about?
Buy when the price is cheap.
Okay.
And sell when the price goes up. So if a stock is 4 naira, and it has potential of going to 8 naira. It's better for you to buy it at 4 naira than buy it at 8 naira. So that's just a simple principle. And
when's the right time to sell?
Well, sell when the price is when the price is high enough that it has reached your target exit. As an investor, you should have exit points or percentage at which you want to sell. If I buy a stock and once I get 20%, I'm out. When you get 20%, be out. Because you might be shocked that people like you that bought then, they will sell, thereby depressing. When you keep on selling, there's a sell-off in the market the price comes down. Then you're still there. You've not taken your profit. So have a set time that you want to exit. And once you get to that point, exit. If your strategy is actually to buy and sell, if your strategy is to buy and hold, for the sake of getting dividend, okay, then fine, wait for the dividend. If it meets your target, then go with the company. But if, for instance, it's not meeting your expected return, then you might want to switch your portfolio. Oh, I see. The very last question, very briefly this time around. Who is qualified to buy? Okay. It's easy for me to say everyone is qualified. Okay. Everyone is qualified, but it also depends on your risk appetite, right? If you can take a lot of risk, you can buy stocks that are seen as risky. They go up, down, up, down. But if you're not if you're risk averse, buy stable stocks. Age, a younger person can afford to take gamble. When I say gamble, I don't mean stock market is a gambling ground. Take gamble as in you can buy high risk stock that has high return because you're younger. But older person is not advisable. Well, you hold them for the sake of your health. You don't want to do anything that will jog your heart rate. And then also your level of income and the frequency. If you have access to salary, as you can actually do a lot of things, or have access to making your money back. You're in your 30s, 40s. So even if you lose this money, you can still make more money. As compared to 80-year-old man, if he loses that money, where is he supposed to get another one from? So access to fund and access to the frequency also, it matters. So let me just give you this truth, since briefly. Thank you so much, Olayemi. You're welcome. Yes, Olayemi Akonde has been here doing justice to the topic we have today for you on Business 24.
It's our pleasure having you around, and promise to be back again with another interesting episode of this show. I'm Michael Nath. Thanks very much for watching.
Swift Dry Cleaners Limited, professional dry cleaners, best in dry cleaning and laundry services, and meets the needs of our consumers. Yeah, Swift Dry Cleaners Limited. Swift Dry Cleaners Limited. Swift Dry Cleaners Limited. Yeah. Swift Dry Cleaners Limited. Yeah, for clean wash and quick delivery. Yeah, Swift Dry Cleaners Limited. Swift Dry Cleaners Limited. Swift Dry Cleaners Limited. Swift Dry Cleaners Limited. For clean wash and quick delivery.
Swift Dry Cleaners. Clean wash, quick delivery.